When you look at the growth phase, we've gone through cycles. Real estate's cyclical, of course. Now, what type of time frame do you look at when you're considering an opportunity like this? I mean, everybody says, hey, a couple of years. We look at the residential market. Let's make an impact in a couple of years, and then it's going to slow down, or it's going to be more difficult. What type of lifespan does something like this have?
It kind of varies. The reality is everything's based on the real estate cycle. And there are different stages of the real estate cycle that generate a certain demand for a certain product. So because we had such a huge crash in the real estate market, almost every product type was affected and impacted by it. So a development community like this instantly collapsed. Now, what's really unique about it, though, is then as the absorption periods has begun, and as people are buying these properties as single-family homes and rehabbing them and retailing them or holding them, what happens is there's now a new demand for homes. And so, actually, what's really funny is it's a catch-22. When we were looking at this property, we actually had an opportunity to buy 70-some-odd lots. I decided not to move forward because I felt it was too early, and I was concerned about the carrying costs associated with this investment. Now, had I purchased those at the prices that I was getting, which were about $12,000 to $15,000 per lot, today, even in today's market, the values in this particular community on a single lot could range anywhere from $50,000 to $115,000 for the lot. So again, hindsight's 20/20. However, with that said, because we have such a diverse real estate investment organization, the moment we started seeing a trend where the actual demand for the single-family homes was coming up, we also started looking at land because we felt that the next part of that stage of the real estate cycle would be the demand for the land in order for people to build new homes. And that's one of the reasons why we use this strategy when we see a different shift in the residential market. And so even though we lost those opportunities in 2009, here we are, 2011, 2012, we're getting our feet wet, and then in 2013, 2014, as we're facing that right now, we still have a very sound value in our investment with this land. So it's really almost being ahead of the curve. And the only way you do that is by following the real estate trend, which is what we do when we analyze investment opportunities.